Please welcome Sanjib Kalita and Robin Zhang.
Hello, everyone. Thank you for making it out here on this lovely Sunday afternoon. Thank you for joining us at Fintech Meetup. Obviously, it's, I've been in this space a while, and I always just feel so happy seeing the friendly faces. Some people I've known for years, some people that are new and wind up becoming friends. And actually, Robin is someone who I met at an event, and we've become friends, and we've known each other for quite some time now. And Robin, I'm so glad and grateful to be able to work on this event with you.
Same here. Thank you, Sanjib. And thank you, Fintech Meetup, for your partnership in launching this first of its kind Banking CMO Summit. I still can't believe how quickly this all came together. All started with a quick conversation right before the holidays. And now look at here, we are with so many senior marketing and the product leaders from financial institutions across the country. I'm Robin Zhang, I'm the head of marketing at Engine by Gen. For those of you who may not be familiar with us, Gen is the company behind leading consumer brands like Norton, LifeLock, Avast, collectively known for its legacy in cybersecurity and identity protection. About a year and a half ago, Gen acquired Moneyline and Go Banking Rates. And by integrating the capabilities of Moneyline PFM capabilities, as well as Go Banking Rates personal finance content, Gen has extended its mission from digital protection into secure financial wellness. And Engine is the embedded finance platform powering that vision. And Engine operates a two-sided network of about 1,300 partners. We connect financial product providers with marketplaces, publishers, and digital platforms, all through our data-centric product matching and personalization capabilities. It's pretty simple. We help our partners expand their acquisition channels and better engage consumers throughout their financial journeys. But today's not about us, it's about this room. In working with marketing and product leaders over the years, we have long felt there's a gap. There hasn't been a dedicated platform for these professionals to get together. And the urgency we've been feeling to bridge this gap is stronger than ever because we're hearing so many partners are talking to us about how are they feeling the pressure and impact of AI, whether it's in their internal operations or in their market-facing activities. And today's summit is really our attempt to change that. And we're so glad to be able to have Fintech Meetup to partner with us and have an amazing lineup of speakers. During those prep calls, I think it's pretty evident AI is on everybody's mind. Everybody is so passionate talking about it from different perspectives. But also, we're very firm. We're not here to AI wash everything. We're not talking about AI for the sake of AI. We're here to share practical ideas of how to adapt to the AI's impact and adopt AI and moving marketing into an AI native function. And we're also very happy to have all of you here. As you could tell during the RSVP process, we were very deliberate. We wanted to make sure this is a peer group of senior marketing and product leaders in consumer banking. And this is all for you. There's not going to be sales pitch. It's all about creating this thought leadership platform for everyone to learn from each other and connect with each other. And we certainly hope to extend our partnership to make this an ongoing platform. And finally, my colleague Sarah DiCara will close the summit by announcing the final winners of Best Banking Awards 2026. And we will have a networking reception in honor of these winners. So I'm not very good at keeping a secret, so I don't want to spill the beans for Sarah. I'm going to stop here. But before I go, I do want to have a big shout out for the team who have made this happen. Sanjib, Mary, Jade, Tyler, Val, Amanda, and so many others. So I'd like to ask a round of applause for this team. Thank you, everyone.
Thank you. Thank you, Robin. And Robin, once again, thank you as well for being the driving force behind this event as well. Without further ado, I think it's time to start the first panel. If I can ask the speakers to come up, and then we can go through introductions. All right, so Howie, maybe you can go down the line and go through introductions. Howie, you want to introduce yourself? Give a little background.
My name is Howie Xu. I'm the Chief AI and the Innovation Officer at Gen Digital. Looking forward to talk more about AI today.
Malinda Monterrosa here, Head of Enterprise Marketing Strategy at Axos, a digital bank. Equally excited to be here with everybody.
I'm Jason Laky. I work at TransUnion. I lead our U.S. financial services business.
Hi, I'm Rachel Castro. I'm the SVP of Business Banking Partnerships and Channel Growth at U.S. Bank. Excited to be here as well.
And our panel today is about trust and how trust is a product, bank as wellness partners. And I actually saw a LinkedIn post from a partner at QED Ventures that said that trust is the only moat. And I thought that was interesting, given how involved they are in banking and as well as the future of banking. If I could get all of your thoughts on what is trust, and actually, Rachel, maybe if we start with you.
Absolutely. So I completely agree that trust, especially for banks, and especially for the bank that I work for, we just won our 12th year of one of the most ethical companies award. And so thinking about trust and why you go with any particular bank, the bank should understand you, they should have your trust, they should be able to personalize recommendations for you. And so trust is ours to lose every day. And so the way that we think about all of our interactions is that we are a trusted partner for our clients, and it's really ours to lose.
Jason. Yeah, I think one of the things we think about with trust and like the movement more and more every year, we say, okay, the consumer's digital first type, but every year it becomes more and more and more. And the first natural engagement you have with any product or service you're thinking about, whether it's marketed to you or you're reaching out, is through a digital channel. You're often pulling out your phone to make that engagement. And it's a long ways away from when you did business and you met somebody face to face and there was a bit of trust there. Now there's an intermediary, and you not only have to know the person behind the device, but you have to trust the device itself. And in a world of AI, you even have, with agentic AI, you even have one more element in between. And so this idea of trust through the digital connections is probably more important than ever.
Very interesting. Malinda?
Yeah, I mean, I couldn't say it any better than these two already have, but just to dovetail off of both of them, trust inherently is an emotional reaction, right, that your customers have or the receiving end has to how your systems are operating to their benefit. So to Rachel's point, it's something that is consistently earned over and over and over again, or very easily lost. And I think there's absolutely a moment in time where it gets talked about a lot, right? But there's this notion of, are we executing against it and are we fulfilling on the promise? And I think that's the piece that warrants the bigger discussion, for sure.
Very interesting. Howie?
I'm pretty sure there are CMOs in the room, and I also told my CMO at Gen Digital that today everyone is excited about AI, ChatGPT of the thing, but I believe that in the longer run, I don't know what that longer means. Is that 5 years or 15 years? But in the longer run, intelligence that's being created by OpenAI and Anthropic is going to be more commoditized. The intelligence will become the electricity. And at that point, what's left is actually the trust that people establish with the product or the brand behind that. So why people are doing your business with you is not because of whether you are using OpenAI or Anthropic or Google model. That's going to be, today it's the premium, right? It's the exciting part. But I think in the longer run, that's going to be commoditized. The trust is what's going to be left that people are going to consumers are going to sort of have in order to pick which vendor or which which banks or who am I doing business with.
I love that. And sort of to replay, I think like Rachel started off with talking about how trust is part of the institution. Then I think Jason started talking about trust as more of an externality and like how it feeds into all of the different devices or pieces that consumers are using. And then Malinda talked a little bit about the promise of trust. And then I think Howie finishing off with how, forget about features, forget about functionality, it's trust, which I think is an interesting.
Arguably more relevant in the AI era.
Yes.
Yeah.
And actually, Melinda, like if I can go to you now and ask you, like as a marketer of a bank, like how is trust change, and how's AI and all this stuff changing the context and marketing to customers?
In I think every way possible, right? We talk a lot internally right now about how AI is definitely shifting marketing, and it's all anchored to the notion of trust. So in our previous lives, you would talk about how much of a resource or like investment you put in on acquisitions versus like retaining your existing clients, right? And I think to some degree is no matter what our strategy decks say or how eloquent our presentations are on like long-term strategy and building customer lifetime value, when it comes down to execution, we were always forced to put investment into direct acquisition or like new acquisition, right? Because that customer lifetime value previously took a long time to incubate and prove out. That has totally shifted. And I think we're all feeling it, right? Site clicks are down, I think, across the board. There's a reason for that. That trust is being built before they're even visiting or engaging with any of your media, and it's through AI.
Yeah.
And what is AI pulling all of those recommendations from? The trust sites, right? Reddit, Trustpilot, large media publications that give you the badges of most ethical bank or anything similar. And so it's so important now to really focus on your customer and the trust that you've built and earned with your customer, and making sure that they're advocating for you, because that flywheel is truly now a flywheel. You don't have to wait for that incubation period to happen. It's happening so much faster, and you're seeing it in real time. We are starting to report daily now on all of our acquisition dollars that are coming through LLM, like referrals, basically, and there's real tangible dollars there for sure, and it's all through trust badges and all of those referral sites that the LLMs are scraping.
That's very interesting. And any of you guys have any comments on that?
It's interesting that you mentioned the Reddit. On the one hand, the websites or the web contents are going to be more AI generated.
Yeah.
I think before you know it, it's going to be more than 90% of the contents are AI generated. So there's I wouldn't say less trust, but it's very different, right?
Yeah.
But Malinda mentioned the Reddit. Reddit is very useful to both AI and everyone. There's a lot more real person interaction on it, right?
Yeah.
So, we are kind of as a society, even though there is more agents, more AI, but the real human interactions, digital interaction in this case, is actually being treasured more. To me, that's because people place more trust, in the interaction over there. There are many, many other interactions. It could be just bots talking to each other.
Yeah.
I care way less. So that's kind of a phenomenon that's started happening in the last few years, and I think that's going to have more and more profound impact.
100%. It's not banking, but it is direct to consumer. I think it's Dove. Their current campaign is literally a snapshot of their Reddit reviews. They basically went and said, like, hey, Redditors, tell us what you think of this product. And they're buying full page ads showcasing their Reddit reviews of that product in huge publications like Vanity Fair and so on and so forth. And so that right there is a signal of trust, right? Like, that's their message right now, is you can trust us, and here's the proof of it. So,
Jason, Rachel?
Well, I might add that we talked a little bit about trust and this growth of AI, and we see we're actually subject to so many more impressions across all the other channels because they're so easy to do, so inexpensive to deliver, that people naturally, I don't know when the last time you got an email or a banner ad that you felt comfortable clicking on. And so there's so much information coming in, this idea of having strong messages to connect with trust in different channels so that when you're ready to engage, it's a better experience, and like that trust threshold is always running away from you.
I'll build on what
Yeah.
Jason was just talking about there with different channels. So I think the ability for us to give customers personalized data and to really understand them is better than it's ever been. And yet, at the same time, I think the ability to then erode trust by doing something that makes them think, actually, this bank doesn't know me anymore because there's not a person on the other end, and you get something slightly off. And I think what we've found is the bar for in-person interactions is much higher than it was in the past. And so you see that in attrition data, you see that in kind of, this in-person touch that you have with customers.
And so just to dive into that a little bit more, like have you, certain customers are maybe digital only, some that are like branch as well as digital, and how much of a difference do you see in terms of channel usage and trust for your institution?
Sure, it's a great question. I think as you see, probably for all banks, right, you'd imagine that in person goes down as more and more customers move to digital. But I think what we found is when you actually have a problem, people are still going into branches. And so then the bar for, I understand you, I know you, I can immediately help you, I'm going to give you accurate information that's very personalized to you, gets higher than it's ever been.
I actually, that's very interesting. And just to jump around a little bit, Howie, one question that sort of came to my mind when you were talking about the changing dynamics was, like, even in terms of, like, let's say in the 2000s, like consumers were worried about putting their credit cards online, but now it's almost like consumers will do whatever they expect their bank to make them right, no matter, even if they're doing something completely, I'll say, stupid. And how much has, as we become more digital, how has that dynamic changed between consumers and institutions?
You are talking about how much can I trust the technology, or?
In terms of like consumer expectations.
Expectation, right? Look, each generation will have its own challenge and opportunity. Like you said, at 2000, right? Before 2000, the internet traffic was not even encrypted, so kind of it was pretty unsafe. But then, encrypted traffic it became the dominant traffic, and then bank all use that. So from that point of view, we almost solved the internet security issues, right? But guess what? Each generation has its own challenges. Now it's AI. AI has a new slew of problems, right? Before we know it, right now everyone uses ChatGPT, kind of the things. But in the next 1 to maybe 5 years, up to 5 years, the personal assistant, the agents are going to be pretty dominant out there. So when you do things, whether get money or whatnot, oftentimes you would talk to your personal agent. AI agent to get certain things done. So can there be risk? Plenty of, right? There are a lot of the, just like the unencrypted traffic back 20, 30 years ago, we are facing the similar thing. Agents are out there. Can I trust the agents? So, but I also know that those technology are going to mature very fast. So I would say the very problem you observed in the 2000s, we are seeing the same thing in the AI age, except we are going to solve those problems along the way too.
That's actually quite deep. I never thought about it in those terms, in terms of like the stuff we're doing with the agents right now. Are we going to look back on it and say, oh, we're doing it unencrypted, if you will?
Yeah, most of the websites, we have today is for human to read it, right? But in, I would say next 2 to 5 years, I don't know how soon, it could be even faster than that. Most of the websites, the viewers are agents, are AI. So there will be prompt injection, a new slew of the issues, right? You have to solve. So we're kind of back to the same kind of the unencrypted internet traffic, but the equivalent problem in the AI age. We're dealing that problem today.
How do you think it's a challenge of getting your agent to, I'll say, act and respond on your best behalf, or other agents trying to trick them? I imagine from sort of like the marketing
Both.
perspective.
There is always, when it comes to this kind of trust, there is always two categories. One is other people being malicious on you, attack you, right, taking advantage of you. The other being just you make a mistake, you didn't realize this is a transaction you wanted to do, inadvertently you make a mistake. Both, you have to make sure that the technology doesn't expose me too much. So I would say both.
I was just thinking of it from like the marketer's perspective. If the marketer is now marketing to your agent, if the agent doesn't know you well enough, you may not actually get the messages you want or are most effective to you.
Yeah. We started, this is just a small thing, we started a marketing one of our technology about a month ago, and the internal joke is, let's actually track the human views as well as the agent views. It was an internal joke, but I actually think in a year, this is going to be real, right?
Rachel, I actually like jumping back to a little bit about the trust and in the context of this like changing technology, how is that changing how your bank looks at financial wellness and how your bank can be a financial wellness partner?
Yeah, it's a great question. So I think in terms of being a good partner for financial wellness, maybe what we are now able to do is actually track engagement and centrality and kind of have more nudges. So if you think about kind of wellness in general and consumer wellness, a lot of what the rise in software for wellness is really around kind of nudging people towards things because you have so much data that you can predict what's going to happen. And so what we're trying to tease out with the data that we have is how do you preemptively understand someone's business so well that you actually know what they need and get them engaged and on our digital platforms and using them enough that you then can provide that nudge versus waiting for them to come to you and ask you for something like a loan. You can understand that they have a cash flow issue coming up because you have the metadata from the fintechs that we've bought on the POS side and on the spend management side, and you can provide them with a microloan, for example.
With a lot of these nudges, it's sort of like you have to balance the line between, not being creepy and like, being helpful. Like, how do you think about that?
I think it's a line that everybody is trying to figure out, and I don't think, I don't know if anybody's quite figured it out, but I think what ends up happening is maybe you don't nudge as quickly as you might as you're trying to understand things. But I think for financial wellness, it's a little bit different than consumer wellness, where I think a small business would expect a bank to understand their business, and they would expect a bank to be able to tell them before something goes horribly wrong, and they'd appreciate that, and that would, improve the relationship with the bank versus erode trust in that type of situation.
Yeah. And Jason, like what trends are you seeing amongst institutions for financial wellness in this very dynamic era that we're in?
I think it's a little consumer focused, but I think it's a little bit on that way, which is how do you get, well, I'll say broader and deeper. And on the deeper part, it's how do you get from being a place where consumers come to just check on things once in a while to being more proactive and to nudge folks in the right direction, to be like a real, like morphing into the financial wellness assistant that's there looking out for you. Second is expanding beyond, when it started out as credit monitoring or whatever, and now like identities become a big piece of it. As you get more into agents, you start to worry about other things like the device and all that. So you want to get broader and deeper at the same time, and that's mostly what we're getting, asks about.
And are you seeing any trends in terms of types of institutions that ask for one or the other, or even like beyond institutions, even types of like segments?
Oh, well, I think what we find is like everybody would like a way to have a financial wellness tool to be able to engage their borrower, their customer, their member of their credit union. And it's just a question of, how do you do it in a way that makes you unique and value added? Because everybody has one right now. And so it's, for us, it's about sitting down with the institution saying, well, what is it that you're trying to do and how can we help you? And, maybe we have it, maybe somebody else has it.
Right. And Malinda, like, from a product strategy, how are increasing expectations of financial wellness amongst consumers, like how does that impact your product strategy?
Yeah, I mean, we're a digital bank, so for us, the digital experience is a huge part of both the wellness aspect as well as the product aspect, right? I think there are so many more touch points that you have to map into your customer life cycle today, and that world, I mean, we've long since surpassed the world where there's this beautifully linear sort of customer life cycle, right? And now it's just sort of all over the place, and you've got to be ready for anything, which is where data comes in. So for us, it's really focused less on like product and features and more on what Rachel has been sort of digging in on, which is all of the data that curates that experience. No longer are we, like, banks are commoditized, especially on the consumer side, right? And when you think about that direct to consumer sort of interaction, we're not being compared to other banks. You're being compared to like Amazon and Target and all of these huge consumer like commoditized big things, and those are experiential, right? Like Amazon completely shifted the shipping model and whether you pay for shipping and how soon you expect things at your doorstep. And it's sort of the same thing, that those expectations, those consumer expectations, are being applied at the banking level as well. So it's almost less about the actual products and more about the system-driven experience. But that said, you do get insights, right? We were talking the other day about how we've announced bundled products this year, and that was based off of the data that we were receiving. And purely that data came down to like, there's a lot of decision fatigue out there, which just circles right back to our conversation, right? That wellness partner, the PFM thing as a product, both as a feature and a product, but more of an experience contributor and experience leader is going to be such a critical thing for consumer banks going forward. I think it's like, how do you make your PFM stand out and make it a wellness sort of mentor or guide more than just let me check my credit score and all of my investments, right? So,
Rachel, can you comment on your product?
Absolutely. We're also doing bundled solutions this year. So we had another nice badge that came out earlier this year with Tearsheet with the best bank for SMBs. And a lot of that was a multi-year strategy on looking at especially micro businesses, which do function more like consumers, where there were just too many intersection points for how a small business had to think about running, managing, and growing their business. And so for us, we did bundling for merchant services and deposits to begin. We'll have card coming out next year, and so we'll continue to bundle as we're going through this cycle. And there's always the bundling and then the unbundling and the software cycle. So we're in the midst of the bundling cycle right now.
And do you have any theories of why bundling is resonating so much with your customers?
Part of it is you don't have to go through multiple processes for each product that you want in terms of, underwriting and filling out your information. And so if there are products and services that you're going to use that make sense to use together, it's a nice experience to not have to think about, do I need to accept payments? Do I need a place to put my money? And what about a card if I want to, actually process payments as well? So a lot of it, I think, is just about making it simpler for our customers and then simpler for us internally as well, so that you understand who a customer is, and if they're creditworthy for one product and you can extend it across, it's a much nicer experience for them.
and I think the path that we're on, right, is that all of those systems are creating this really leading towards that sort of Amazon-like experience, right? So right now, you can tell Alexa to add something to your cart, but you can't tell Alexa to purchase it for you, but now we can. So Santander and Visa just launched agentic payments in South America, and I feel like that's coming soon, right? So if you have a bundled product and you can say, hey, Google, move $2,000 from my checking account to my savings account and make sure it sweeps into my investment account on the 15th of every month, that's where we're headed, right, from a consumer banking perspective. So having those product suites that work really well together is going to be key going forward for that client experience.
Yeah, so Gen Digital has a product suite in the financial wellness, from MoneyLine to Not Money, and of course we have the B2B solution like Engine by Gen. The way I look at it is that AI assistant is going to be a key part of it. And early on when we discussed, I think the word, there's a creepiness or whatever what we describe. I think the line between being creepy and then being magical is actually a blurry line. When it works, when people love it, when people like the experience, it's magical. When people kind of do not have enough trust, are not sure, or sometimes the product failing on you, then that's creepy, right? But really, AI has to be there. If it works, then it's good, right? So the title of the panel, Trust is the Product. I would say when the product works, when the user experience is there, then trust is the product. When it doesn't work, then become a creepy, right? So the creepiness is the product at that point.
Jason, any thoughts?
Nothing to add on that.
Oh, okay. I guess I want to ask a little bit about AI agents and how, and you touched upon it like at the beginning, but like how AI is shifting from the periphery to the core, and is that actually is that a fair statement or?
Yeah, to the core. Well, what does that mean, right? Before it's like I have some questions. I have some, instead of checking Google on, something works or not, but now I actually expect AI to actually deliver the outcome.
Yeah.
Right? So I think when ChatGPT moment was magical to many of you, myself, it's because it kind of gave me the answer, gave me the intelligence. That's wow, this is amazing. But next few years, when aging becomes dominant out there, it's actually going to deliver the outcome, right? Again, this is the line between being creepy and then magical will be blurry. Like when I wake up, right, something already happened.
Yeah.
Right? Of course, I probably will have some policy, some guardrail. It's not going to move, $100,000 out of my account for no reason. But I give some guideline, I give some guardrail, and overnight things happen, right? So to me, that's the outcome. It's going to be there. When that kind of things happen, action is happening. When the action is happening, when the outcome is delivered, that's the core.
And Malinda, have AI agents, how have they impacted your organization or your business?
Oh gosh, I mean, I think just like every other bank, there's obviously a mandate for us to figure out how to incorporate AI into everything we're doing. There's a lot of risk elements that AI has been super helpful with, right? Like speeding up underwriting and risk mitigation. Obviously, there's still a human element that's needed to that, but it definitely brings a really nice sort of calculated, objective sort of overlay to our risk process and has improved it. We cut copywriting out of our org chart this past year, which was an interesting shift for us, and still sort of experimental, I'll say, but that was a big shift. And so you see it from like these really fundamental, truly trust and risk anchored areas like monitoring risk, and then something as like, I don't want to call it simple because copywriting is not simple, but something as like task-based as copywriting, but still fundamental to what you're doing, right? Like if your copy's just recycled or it doesn't hit the right narrative or pull on the right heartstrings, that could go really awry. So trusting AI and something like that is a big trust exercise, not to put too much on those puns, but so it's everywhere for sure for us. But what I'd say is the biggest shift for us is what Howie was saying, which is like we find ourselves marketing to the large, like these Gen AI large language models almost just as much as we're marketing to our customers these days. And that conversation is becoming more and more prevalent internally for us, is how do we make sure that we're, ChatGPT, Claude, they're scraping the right things and serving up the right things to our prospects and our customers.
So Malinda, you said copywriting is cut out of the org chart. Do you see, do you have anything added to the org chart so far, or do you anticipate?
We added
So
added an agent into our workflows for sure. So
it's part of your org chart.
yeah, so we actually produced our first org chart for our CEO a few weeks ago that had agents in the org chart, built into the org chart, and the agents are built into our process maps as well, which was it's been an interesting conversation internally for sure. It's exciting, but also I think a big shift and really nerve-wracking. And then there's always the question of like, where's the human element that's overseeing that, right?
Yeah.
And you and then it leads to, well, it's this manager right here, it's who they ladder up to or whatever it is. And so, but there's a lot to wrap your brain around there for sure. It's fun and scary. It's creepy and magical. Both simultaneously, kind of like Chapel Roan. Thank you for the laugh. I thought that was funny.
Rachel, any comments?
I'm just thinking about Chapel Roan for a second, but great concert. No, I think just to build on that, I mean, I think every bank is going through their own life cycle with AI. I think for us, and maybe I'll go in a different direction from copywriting and back to trust and the human element, I think where we're starting a lot of our use cases are all around productivity and efficiency. So how do we free up the time of humans that we think are engendering that trust and building these relationships to spend time there versus all the other tasks that they have in their day. All the other things that bankers do with scheduling and follow-ups and documents. And so how do you really spend some time to automate those tasks as much as possible to free up the human elements that might be further along with what we experiment with.
That's so true. I think JP Morgan just launched their wealth advisor their agent wealth advisor. I forget her name. It's like Ellen or something like that. And I think the statistics are crazy. She does the work of 11,000 advisors and puts in 18,000 X is the equivalent of 18,000 X hours of the advisors would put in. But that said, right, they didn't replace the advisors. What they did was they allowed this agent to support those advisors for the more relationship, to further develop the relationship model that is so necessary, right? Because while this agent is serving up really solid insights and potentially advice and whatnot, it's really the people that need to deliver it, and it's really the people that are going to really codify the trust in all of those insights. So,
and when thinking about the intersection of trust and financial services and AI, obviously, I think data is very critical and core. Jason, how can FIs stay on top of the data problem or opportunity?
Well, I think there are a couple things, and I think it applies to financial institutions and probably to anyone, which is there is so much more information that institutions have access to, and bringing it all together to be even more effective at marketing or however you serve your customer is more important. And it is really hard, even like a lot of folks that are in large financial institutions, it's really hard to even connect all of your own data to understand the full view you have of your customer. And if you want to win in an agentic world, your ability to understand through your own data and anything that you can bring together to connect it and build a strong foundation of data it's probably a way you're going to win or advantage yourself in the market. I think that's what a lot of people are looking to solve right now.
And actually, let me just take a quick pause. Any audience questions right now? No. Okay. Let's
we
keep
can
on
see
going.
you all now.
That's right.
From the data perspective, what are you sort of seeing in terms of within FI or even broader, like how the, the data question always like it's a big question, obviously.
Yeah, so if you think about why our engine by Gen, the engine product line is so successful is because we have so much, data, good data out there. We are working with some of the, largest AI vendors, obviously, and you can think, they actually can get, let's say interest or whatnot, right? There are plenty of data out there. But when it comes to accuracy, the data that's curated, the data that's accurate, data that's fresh, data that's relevant, you still need the good data, right? So when you have good data, AI companies wanted to work with you, right? Because if it's sort of just because there's interesting information here and there, that alone is not interesting to them. They want to curate it, fresh, all those things. So I think data is super important. That's sort of to the outside world. And within the company, Jason mentioned that, in the past, it's harder to get all the data, we can make sense out of it. I think with AI, we are going to make sense out of, even internal, right? We have 500 million users. In the past, for us to, make sense of 500 million users, it's a very daunting task.
Yes.
Now we are actually at the point that we can make a lot more sense out of data, and then we can provide value to those users.
And I think as financial institutions, others are moving into cloud data warehouses like Snowflake, like Databricks, there's actually information that was siloed around like the large banks that would have been really difficult to bring together with all the systems. But now that it all sits, say, in a Snowflake, that ability to connect it becomes easier and more necessary than ever.
That's a very interesting thing. So I've been a head of AI for 3 public companies in the last 8 years. The way I look at AI is that it exposed data silo tremendously, because data silo has been there for ages, right? Forever, ever since data was invented. But whether CEO or the company has not paid enough attention to it. But because of the rise of AI, we suddenly realize if we still have the silo, we are not going to get a lot of value out of it. So the silo is actually exposed. So the way I see what we are doing as an industry, overall financial industry or outside of financial industry, is really getting value out of the data by breaking the silos, by marrying the merged data, right? Consolidated data with AI together. But if a silo, that marriage is not going to be working well. But once you sort of break the silos, then you marry with AI, wonderful things or magical things happen.
Actually, Melinda, if I can ask your thoughts on data and how do you think about data differently now than you did, let's say, like 2 years ago?
Oh, definitely, yes. And I think about data way too much. I can't agree more with everything that Howie is saying. I mean, how many of us use Salesforce, right? I think I read a report the other day that said 90% of financial institutions use Salesforce, but 70% of those financial institutions say that their CRM is not systematically integrated to serve their needs, which is insane. Like, that's an expensive tool. And so, but we
thought that they are integrated, right? But not really
exactly. True. And then you've got, your core systems like your Jack Henrys and your Encinos and all these things and these siloed systems, and there's no unique comprehensive view. And we talk about wanting to create this this financial wellness experience, but you can't do that without the right data. And Rachel said it earlier, there was a moment where she said, like, you have to earn your trust repeatedly, but all it takes is one bad moment to lose it. And bad data does just that. And when we talk about AI enabling us, I think AI is great because it does help us bring clarity through the data. But if it's not fed the right data, it also it's not serving us in the right ways. And so AI is definitely dominating how we think about data. We're definitely thinking about data. You're right, it's exposed the fact that a lot of our data was in silos, and that's a big thing that we're working on right now, is bringing it together and having sort of this like golden record or golden customer profile that works across different businesses and works across all of this sort of core systems. And a lot of that is culture too, right? How do you get your mortgage team to play nice in the sandbox with your auto team or your deposit team and not fight over whose lead record that is or whatever. So those conversations I think are happening more often, faster and more frequently, which is a good problem. But then now it's like, well, we're out of time, because the customer experience and the expectations therein have caught up. So the pressure's on. I think that's what it is like the data is, the conversation around data feels very pressured right now. Yeah.
So, Rachel, actually, I think back to 20-something years. I worked in a strategy consulting firm and was consulting for this European insurance company. And I remember back then, like we were talking about golden data, golden records, and I sort of feel like I'm reliving the past. Did you get a sense of that at all, or?
Yeah, for sure. I worked for a strategy consulting firm before coming to the bank almost 5 years ago.
Yeah.
And so one of the first things I worked on when I was just focused on strategy was looking at the architecture for small businesses, right? And so I think what everybody's articulating is you have data objects with very different meanings that are, that mean different things to different parts of the bank. And sometimes it's hard to get the investment. And I actually think AI has accelerated that conversation in terms of people understanding that the underlying data elements can be called the same thing, but be completely disparate pieces of information. And so you can't bring them together and do these great things without the, right data hygiene. And so you're right that I don't think data hygiene is by any means a new thing, even when, there wasn't, when AI wasn't at the state of maturity we have right now, and you were just doing maybe some basic machine learning, you always needed that hygiene element.
Yeah.
But I think the need and the acceleration behind kind of cleanup of the data and bringing it together, and maybe people who were not as technical kind of thinking about it in that way has certainly accelerated in the last couple of years.
I love that. I love that. And we're actually out of time at this point. I feel like I could talk for like a lot more. Any final quick thoughts? If I can just go down the line, Howie, let's start with you. Any final thoughts?
Well, you started the panel discussion with analogy or with thinking about internet early days, right? I would say the same thing. Internet have completely changed the financial industry, financial awareness, or personal financial and everything, right? And your company wouldn't exist without internet, right? I would say the same thing is happening, that AI is the new paradigm, that there are plenty of companies that wouldn't have existed without AI. And so this is an exciting time. I think, I might be biased because I lived in the AI world in the last 11 years. I believe this is actually going to have 10 times more impact to us, companies, consumers, than what internet did to us, maybe even more.
Malinda?
Well, I think a lot of what you said, or what you just said, is totally right. History sort of repeats itself, and we find ourselves having a lot of the same conversations. And I don't think our intent or our overarching strategy ever changes, right? It's to serve the customer, and we have this privilege of being in service to their financial wellness, and always have been. But the timeline at which the acceleration of technical capabilities increases and the speed at which we're expected to adopt those technical capabilities continues to accelerate, right? Which puts some added pressure on for sure. And then through the lens of AI, there's just this notion of do more with less effectively, right? And so that's a quandary, 100%. And I think we're all in it together. So if anybody has any great ideas or best practices out there, I'd love to have a conversation.
Yeah, and I think to what you were saying, the move to agentic AI is going to, I think, flip the script on trust, financial wellness, and ways we think about it. You talked about taking the place of 10,000 advisors. Well, my agent may take the place of everybody else's wellness piece because I trust it to take care of me. I hope it works, but we've seen a change already, and maybe some credit card space already, where people are using the agent to say, hey, I've got this whatever trip and these set of lifestyle things coming up. What's the best product for me? no longer do you get just a list of, paid search results, but you've got somebody, an agent, giving an opinion to you about what product. And what we've seen is it starts to coalesce around some of the card issuers that have been really good at marketing and building trust around certain business cases. So there's a big change, and I think we're just beginning to see the impact it's going to have to us as financial institutions and marketers.
Yeah, and Rachel, I'll let you have the last word.
Yeah, I'll circle back to your first comment around trust as a moat that banks have. And so for banks in the audience, I think thinking about trust as a distinct strategic advantage that you have and it's yours to lose is maybe something to leave you with. And then how do you leverage technology to amplify and retain your moat as opposed to slowly eroding that moat and the trust?
Well, thank you. Thank you all, and thank you for joining us. And we'll actually take a 10-minute break, and we'll come back here with the second panel. Thank you.